Anybody want to share their screen and maybe do a recap of what they kind of looked at, what they saw, what they kind of recap of the trading session? I'd love to have you guys do that, or maybe even a recap of the challenge, whatever you guys felt was more powerful today, trading the news or trading the challenge. Anybody like to share? Because I really think that this is a crucial part of. Of trading is doing the recap session and finding what we did great at, what we might have improved upon, or things like that. So, anyone? Bueller. Let's see.
This is my screen.
Lisa asked the question.
This is the challenge.
Okay.
And when you said we were to buy at this, when we were up here, I had sold. And when I saw it break this, I thought then that it was going to come down constantly. But then you said we were to buy into the upside, so I started buying to it.
Oh,
and
okay.
I got out right here at this action point.
And then you bought back in.
And then I bought back in again. So I'm at 5.6 point something.
Got it. So what's your kind of takeaways, Cliff?
Is to buy in or sell in, knowing that up to a point from that I'm going to buy until it gets to a particular action point. But the thing is, I don't know when to start buying or when to start selling. Because right here, when this M, this is what the index they call it, or the apex. But I was thinking when this candle here closed below.
Okay. Go ahead, Cliff.
I was thinking when this candle closed below, that's when I should start selling. But then you were saying buy into it, buy, and so I started buying, and I see what turns out here.
Right. So just to kind of clarifying points, with Patricio, for some reason I can't. You got to enable annotations on your side, I think, but because I can't draw on your charts, but I can draw on everybody else's. So I think on your side in your Zoom, you got to enable annotations because I can't draw. But so if you I can't do. I can't. I also can't do support. So let me see if I can do this. Yeah, for some reason I can't draw on your charts, nor can I request desktop control. I think that's on your end. So I'm going to share my screen and kind of go over what you were just talking about.
Okay, close out of that.
All right, so right here, so if you can look into that link for next time, if you could have annotations, and I'd appreciate it. So right here, when it did break, we were into sells, right?
Yeah.
And we were into sells, and we rode them down to this action point, right? And that's when I had him get out on that action point, because this is also could be a turn point, right? Okay. And we did get confirmation a little bit of this green bar closes higher, right? And then what happened is it came and it went back down because we were out of any sells right here. So we closed out of all of our positions. The next thing to do is to start buying and building into the turn move, right? And so that's what we did. So it wasn't like we bought here or we started buying here. We weren't buying right here. We were buying once the action point told us to get out of our sells. And then once we were out of everything, we're like, okay, well, what's the next highest probability? Well, the next highest probability is, well, it just ran down 2 price cycles, so it should run up,
Okay.
And so that's when we started buying, getting a buy layer on. Now, what was confusing is that Patricio had a buy layer up here that we were fixing. So this was his fixing layer, right?
Okay.
And this is a part of the market that teaches you bad behaviors, meaning that if you would have stayed in, Patricio, and rode that all the way up to there, and you would have been profitable on this layer and this layer and this layer, the market typically rarely ever trades in a V, right? Sometimes it does, but the probability of it trading in a V is much lower than it trading like this. Does that make sense?
Yeah.
Right.
So whenever we're trading, we always deal in the world of probabilities, right? And so if you were to not notice that and not see that, and then and then you just held on to all those trades because we were doing a zero take profit, that's where you get in trouble, because the market teaches you bad behaviors. Does that make sense?
Yeah.
And you would have gotten out with everything with a lot of money, and you're like, oh, I like that. Let's do that again. And it's rarely that happens. And so that's why the whole challenge today, and the whole principle of the challenge was today, is get out at those action points. Learn to get out to the action points, because the action points tend to be more reliable on the price cycles and everything than, and those tend to hit at a higher probability than if we're to ignore those action points. But that's also why we traded the zero take profit. And quite honestly, when it passed this action point right here, you got out. And I would have still held on to those because it didn't stall. Remember that? And so I would have held on to that because it didn't stall. And I would have done the same thing here. And I probably would have got out there because that looks like it stalled right there. So I would have gotten out right there. But if it didn't stall, and I saw this candle, and if it didn't stall, or if it was just like a quick flicker and ended there and then picked up there, I don't remember the action of that move, where it could have been, it could not have been a stall. It could have been just a close and then a pop up higher. You could have had the opportunity to ride all of this if your action points told you that. So if you're reading the action points correctly, you got out at an incorrect moment. Do you know what I mean? And you could have rode this depending on the action of this candle right here. If it was a stall, get out. But if it stopped and then the next candle picked it up and continued upward, then you could have ridden it all the way up to that point. And so that's the advantage of a zero take profit. That would have been the proper play. I don't know if I would have gotten out right there, but I definitely would have gotten out on this blue candle that closed right there. So that's the advantage of, or you could just turn it into a ride the wave, whatever you want to do. But you could have picked up at least to here where you closed out right there. Do you see that, Patricio?
Right.
All
yeah,
right.
being able to identify the stall, that's hard, and not just go ahead and pull the trigger. I agree with you. And another takeaway for me was that I thought you had said that you should be cognizant about that 50% retracement of a candle. I thought it only applied for big candles. Now I see you apply it to almost any candle.
You can apply it to almost any candle, but I only take like this candle right here. I would be fading this for it to come maybe down here, or at least 50%, but I don't fade it until it stalls, right? So It hasn't technically stalled yet, and now I would. Now I'd fade that and start fading it, and if it moved higher, I'd fade that too for a 50% retracement of that candle. Because again, now we're into this large price cycle. So you should get at least a 50% retracement of that candle and then get out. So I don't take trades on small candles, but I definitely look for the reversal point for 50%. Like right here, I thought I was going to reverse, but it didn't. It wicked out. And so it didn't cross it. It wicked out. So anytime it wicks out or doesn't stay at 50%, it leaves the door open for a lower move, right? Say case in point right here. If this candle does not hit the 50% it leaves the door open for a move higher, right? And so if I was into anything, I would probably get out right there because it failed to come down at least to that 50% mark. So it leaves the door open for a move higher.
Okay, so I do have a buy. So
Where did
hold on?
Did you get into a buy down here?
Yeah.
Okay.
Yeah.
So I would turn that into get out at the 50% because then that right here, that candle. But if it fails, then I'd hold on and see if it's going to crack the top again, right? And that's kind of the action of a bigger candle, right? So if you're in a situation where you're taking profit, now you're just identifying where's the best place to take profit. If it does cross that 50%, then you might see it come down to here or get a full 100% retracement, right? But if it does pop up above, then you could turn that into the ride the wave on that buy. So makes sense.
Yeah.
I want to really answer Lisa's question. When should she go from a 0.10 to a 0.05? Price cycles. Price cycles is going to answer that question for you. So you measure your price cycles, and if you're seeing that we're getting like 30, anything that's greater than like 10 on a price cycle, you should probably trade with a 0.05, because if you're going to take the same quantity of trades at each layer. So if you normally trade on a layer of 4 trades per layer, and the price cycles are, 15 to 20, you need to cut that to a 0.05 so that you can continue to take the 4 trades and still stay light. You can go light, and when it goes against you, it's not like what we saw with Patricio, where he was losing $30 because of the big price cycles. You would only be losing 15, and that's a lot easier to recover from. When it gets back into normal wobble conditions, then you can go 0.10 and you can make 15 up a lot easier than you can 30, right? So price cycles is the big indicator as to what your position size should be. So does that answer that question, Lisa? And I love John's comment. My takeaway is not to get anchored on your analysis. Yes. And so if you're an analytical trader, that is so difficult to do. I don't envy that because I'm not an analytical trader, but if you're an analytical trader, that is really difficult to do, is not to get anchored to your analysis, because as an analytical trader, I don't know if you are, but I'm assuming because of your comment, you have to be proven right in your analysis. And so the thing that I tell analytical traders to do is to have 2 theories. We call them theories, not analyses, right? So have 2 theories. One, this is my theory A and theory B, and wait for confirmation on each of those. And once you get confirmation on that theory, then that becomes your analysis, right? So are you still holding on to that buy, Patricio?
Yes, I am.
Good, because now it's going to turn into a ride the wave situation. So what I mean by that is the next time you get the next candle that closes lower than the previous candle, that's when you should get out of that trade. So if it comes all the way down and closes here, you should get out. But at some point, our candles should start shrinking, right? You should get smaller candles. So,
so if I get smaller candles, get out as well?
No, just it'll be easier. It's because you don't want to have to wait for it to come all the way back down here. So at some point, you'll get smaller candles, and it starts slowing down. Momentum will start slowing down, and then you'll finally get a candle that's going to break lower than the subsequent candle. Does that make sense? Or the previous candle?
Right.
So if this candle forms green in 10 seconds, which it should, and then the next candle comes and breaks and is lower than this is where you need to get out. when you're trading zero price cycles. And this move right here, if you would have stayed in, you would have had buys all the way up to here, depending on this action point here, right?
Please don't remind me that.
No, and I'm not saying that you could have or you should have. I'm saying that that's the way that the action points, if that's the way the action points tell you, that's what I look for. Does that make sense? And right. I would have been perfectly fine if the action point said, oh, there's a stall here, get out. And been perfectly fine with missing this opportunity. But if the action point says to hold on, that's where I have those $1,000 days or those 10% returns, is because I just catch something like this and gobble that up because you would have been into a pretty good size layer here of all your buys. Do you know what I mean? Mm-hmm. And then when you catch something like this, that's again, the best part of trading with a zero take profit is that you can catch runs like this. It allows you to catch runs like this, but you got to be very, very, very precise in making sure that you are getting out at those action points. Does that make sense?
Right. And then the other problem is getting out too early. But yeah, I agree with what you're saying. I completely agree with that.
All right. So we're just, obviously this is where if the body of this candle closes lower than that's when you would get out. Now, because it failed, this blue guy failed to do that, it leaves the door open for it to move higher. And so it's moving higher. You're not going to get out. Right.
Of course.
Okay.
Right. So yeah, this is when you really. I'm sorry, I used such a small position on only one trade, but
yeah. So you're taking the bus route.
Yeah. I'm taking the walking route for sure.
Dad, how did you do today? Just curious.
Good.
Good. There's a but.
No, I'm into some sales right now, and I'm waiting for recovery and profit.
So let me just tell you on this move higher, I don't think I would be taking any sells because it's definitely an expansion move. And yes, the theory, it flip-flops. Exactly what I was saying here. The probability of a price cycle of it coming down is greater, but you're also you don't know where that's going to be. True. And so for me, anytime I get into a situation where you get a break of a high, anytime I get in a situation where you get into a break of a high or a break of a low, like a major breaking point, I wait for confirmation before I take the other direction, right? Unless I got to fix some sells. Like if I sold here, and this happens all the time, you sell here off this bounce and then it just breaks and runs, right? Then you got to look to try and fix those guys, right? But this is running like crazy. And if it was me and I was trying to fix this, once it failed right here, I probably would have got out of everything and then just waited to just take my lumps, take the losses, because you definitely should have hit your stop losses. And if it didn't hit your stop losses, then you don't have good stop losses, because that's a 70 pip run, and you should have had your stop losses hit at 30. So I don't know where you entered your take profit, but where you hit it that, but that's the way I would have traded that. Is as soon as it popped above here and it failed to come back 50%, I would not have sold, because it failed that. And so then that's what we talked about with Patricio, that it opens the door for a move higher. This opens the door for a move higher, right? I don't anticipate us seeing a climb much longer, but you never know. I mean, this is a good trade for Patricio, even though you're walking. Anybody else riding this? And built in this move, riding it? Good. Are you running, crawling, or walking?
Wish I was running. How about you? Tell
the other thing too, Patricio.
Running. Nick is running. That's great.
The other thing that you could have done, Patricio, is remember, I don't know where are you in on your buy? So tell me where your order is.
My order is at
what price are you at?
98651.
Okay, so you're
98651.
Right in here, somewhere in there.
Yeah.
All right. So what you could have done is remember when I said that it leaves the door open for a run higher, you could have bought. You could have placed a buy there. Remember when I said it failed to do that, so it leaves the door open to run the higher, you could have put up another buy there. And so what you're doing is what a lot of traders do is like, oh, I'm in profit, so I'm just going to watch it run and see how far it runs. Now, because it did cross over, that's where, to me, I would get out, right? But I'd wait on this candle just to see where this candle ends. And if this candle definitely fails to break that, then we're looking for a run down. And that's the end of your ride. So the wave came to the end and left you off at the beach. And that's where I would take my profit, is right there. Be fine with that.
So those adding of the buys, how would you know where to place the next buy?
Right here on when it fails to come down. If this wick was so fast, right, I would still place it like somewhere in here and try and get in, right? As soon as I saw failure, as soon as it didn't break this, I'd buy in and kind of build in, right? The other thing too is you never want to build, you could build in, and then I would probably start adding secured trades so that I make sure that I'm winning on here and winning on this. And then if I build again, add another secured trade so that if it does whipsaw back, you win on all your layers. That makes sense?
Right. So I was working a secure trade, and one of the weeks just took me out, but I did do like $60 on that. So
that's not bad. I mean, so that's, I think John, was it John? Yeah, John was building. So you did. How did you guys do on this? So this wave, in my opinion, is over. So if you're not out, you should be out. I'm not saying it's done continuing to move higher, but the opportunity to ride that has brought you to shore. I know I'm not saying it's going to come all the way back down and give you 100% retracement either, but I would expect a consolidation before another move, and that could be higher or it could be lower. You don't know. So, but I would expect a consolidation here. How did you guys do? Anybody knock it out of the park today? Need some fish. What do I do now? 1%. Good job, Nick. Where'd you end up, Patricio?
Total amount on my account?
Yep.
So that's 23,666.03.
No, like for today. What was your profit for today?
I have no idea. I'm gonna I'm gonna be down because of the news trading.
Oh, okay. So
remember I pressed sell when I meant to press buy.
Yeah.
So I lost like a couple of $100 on my account, but for the week I'm up like 4,000. So
awesome. Dad, you're still trying to fix some trades there?
Yeah, if it comes down a little bit more, I'll be,
break even
300 for the day.
Okay. All right, 1%. Good job, Nick. Good job, guys. I mean, we traded through non-farm. We were profitable. We caught a little bit of this. Took the challenge. Did anybody find that they got better at zero take profits? Or did they find they struggled? That's the next question. How was that trading with zero take profits?
I think that was okay for me.
So lead kind of struggled. Well, good job, guys. I mean, overall, I think this was a good lesson, good trading. Good, everything was good for the most part. So, anything else, guys, before we kind of end it, kind of call it? So I got to get over to boot camp. John got torched. That's why you have 2 analyses. And when trades go bad. That's okay. All right, guys, we'll end it here, and we will see you guys Monday morning. But I think overall it was good lesson. We learned, hopefully you guys learned some things and continue to build on that next week.
Thanks a lot, David.
Thanks,
All right,
Dave.
thanks, guys.
Thank you. Have a great weekend.
Yes, you too. Thank you.